Hey, what is going on, guys? Tobin Short here. Make sure you guys go check out heroesfinancialgroup.com. Also, don't forget to check out the Facebook page, Heroes Financial Group. Give that a like and a follow. I truly appreciate that. And if you could also like this video, share this video, maybe now, maybe at the end of it, whenever you want. Only if you want to, though. And I'd really appreciate that. So in this video, I'm going to be talking about where you can invest your money, right? So in order to do that, I'm going to be talking about the 4 homes of money, which are really the only 4 places that money can actually go, right? That you can actually put your money to in order for that money to work for you, right? So in the last 2 videos, I talked about saving money, right? How you can keep more of your money, save it. And then the other one, how you can earn more money and make sure you've actually got more cash flow coming in, right? So the third way, right, that you can actually be wealthy is by properly investing your money. And again, having that money work for you, right? A lot of people think that, you can only be trading your time and working for money, you physically working for money, right? But really the best way for you to gain wealth is by investing your money. And again, having the money work for you, because money never sleeps, right? Money does not sleep. So if you have it working for you, you can be making money in your sleep, right? While you're resting and nice and comfy, nice and warm, in your bed, under your blanket, whatever, your snuggie, right? So we're going to be talking about that, right? So number one, the first place that people usually think of where they can put their money is, other than their wallet when you have cash, is the bank, right? The bank is the first home of money. Okay, so when thinking about these homes for money, right, it has to pass a few of the tests, what's called the laser T test, actually, LSRT, right? L stands for liquidity, S stands for safety, R is for rate of return, and then the T is it tax-free, tax advantage, right? What's the tax consequences of these homes, of this home for the money, right? So the bank, let's start with that. Again, the bank. A lot of people, most common, right? People have their money, direct deposits, savings going into a personal bank account or maybe even a business bank account, right? Whatever. The bank. Is it liquid? Yeah, it's liquid, right? So yes, that passes that. Check. It's liquid. It's very convenient, right? You can go get it right away via debit card or direct deposit, whatever. EFT transfer back and forth. It's liquid, okay? You need it, it's there. You can go withdraw from the ATM or once again, just use a debit card. Is it safe? Okay, yes, the bank is safe. FDIC, right? It's insured. It's there, okay? It's nice and safe. It's tucked away with the bank, right? Cool, awesome. The rate of return. Now, does the bank get a good rate of return? No, it does not, right? So, I'm sure you guys notice if you've ever looked at your bank account and whatever your checking or savings account gets, you're getting 1%, maybe less than that, right? Some can give you up to 2 or 3, right? Maybe there's different bank accounts out there that give a higher yield, but still your rate of return really isn't that much, right? Not that much compared to the other homes of money, right? That you can get more returns on. Okay. Next test. Is it tax-free? Tax advantaged? No, it's not. Okay. Having your money in the bank, you're still gonna have to pay gains tax on those, on the dividends that you get from the bank. It's not really doing anything. Also, here's another disadvantage of having your money, or most of your money in the bank. Inflation, right? Inflation. That's something that people kind of neglect, that is, taken over. Inflation is when you've got more, when your prices for things are higher and your money that you have is able to buy less, right? It's not able to buy as much. So, and people don't realize that, right? Which is why, if you want to afford something, right? you need to earn more money. Okay, you need to make more money, right? So having inflation, kind of take over your bank account, right? And the money in your bank account is not at all able to gain enough to even cover or match the rate of inflation that we have. So that's the first home of money. Second home of money, right? The second home of money is the stock market, right? If you know anything about the stock market, and especially with when COVID hit, right? It crashed, right? It crashed around February, March, and a lot of people, including myself, who had money in the stock market or in their 401ks, IRAs, whatever, lost a good bit of money, right? So here's the thing with the stock market, right? It's a great place and a great place to put your money and, have equity ownership of companies, right? And of course, you get a pretty good rate of return, right? But at a high risk. Okay. So number one, liquidity, right? If you're just in a regular 401k, not 401k, in a regular, stock market trading account, okay? It's somewhat liquid, right? It's pretty liquid. Okay, cool. You can transfer the money in and out, make trades, buy, sell companies, okay, and then withdraw your money whenever you want. Okay, but obviously in a 401k or IRA account, it's absolutely not liquid. Okay, that's kind of another topic for another video. But in that case, it could be with the stock market, it can be liquid or not liquid. Okay, so that's kind of more of maybe not, maybe yes. Okay, is it safe? It does not pass that test. All right, the stock market is not safe for your money whatsoever. All right, if you pay attention to it, right, it goes up and down, up and down. Okay, so you could be losing money. Okay, you could be gaining money, but again, you could be losing. Right, and who wants to lose money, right? Warren Buffett said, the first rule of investing, right, is to never lose money. Okay. Second rule of investing, right? Remember rule number one. So never lose. In the stock market, you can absolutely lose. Okay. You can also win, but you can absolutely lose, right? And then here's the other thing though. Here's the kicker to that. What else are you losing? Right? When the stock market drops, what else are you losing? Do you know what you're losing? Let me tell you. You're losing time. Okay. Time is actually compound interest's best friend, right? So he who understands compound interest earns it. He who does not, doesn't. He pays it, right? So time is another thing you're losing, because when the stock market drops, okay, and you lose all that cash, you lose all that money in the stock market, and then depending on what you do, right? People always say the stock market always goes up, okay? But hey, you know what? How long is it going to take for it to come back up? How long is it going to take for you to get back to where you were originally, right? Because, hey, you put all this money in, in the stock market, and then it drops and you lost, right? Maybe you gained, and then maybe you dropped down back to, your actual principal amount that you'd put in, and maybe you also went negative, right? So now you're waiting, okay? If you don't panic and pull it all out like a lot of people do, right? And then pull it out at a loss. Now you're just waiting, okay? Oh God, is it gonna come back up? Please, 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 let it come back up, right? Don't let these companies go out of business that I have my money in, right? Is it gonna come back up, okay? When is it gonna come back up? How long are you gonna be waiting for that, right? Could be a year, 2 years, 10, 20, okay? It could be a few months, right? You really never know, okay? No one can 100% predict the stock market. So, right? So it does not pass the safety test whatsoever. Your rate of return, okay? Once again, high risk, high reward possibilities, and then also high loss possibilities. So your rate of return, that's also kind of maybe, maybe not, right? But your rate of return, depending on what you've got your money invested in, it can be pretty high. So so we can say it passes that test, right? For your rate of return. Now taxes. Does it pass the tax test? No, it does not. Okay, absolutely no, it does not. Right, you're gonna have to pay your capital gains taxes whenever you sell those companies, those shares that you have. Right, it's gonna be different when you have it for at least a year. Okay, but either way, you're gonna be paying on that. And then again, with a 401k, it's tax deferred, which a lot of people think are great, but it really isn't, because hey, by the time you can actually access that money and you're 59 and a half, your taxes, you're probably very likely in a higher tax bracket, and taxes are also higher, right? But again, that's a topic for another video. All right, so it does not pass that test whatsoever. All right, so the third home of money, right? Real estate. Okay, real estate, something that a lot of people, is definitely think it's awesome, right? People think that, yeah, man, we got to get into real estate. Real estate agents, there's like millions of real estate agents, okay? And then a lot of people investing and putting their money into single family homes and all that stuff, commercial buildings, whatever it may be, right? Land, real estate, okay? Real estate, when you're talking about liquidity, it does not pass that test, right? You can cash flow, whatever you can, or you can not cash flow when you've got real estate, right? But when it comes to liquidity, in order for you to take cash out when you need it, right? If you're not, especially when you're not cash flowing on that property, and you've got the mortgage or whatever it is, a deed, right? And you got to pay off. In order to take money out, you have to refinance. Okay, refinance that, or you're gonna have to sell it. Okay, and then how long is that gonna take? All right, there's time to that process. And then there's also, what else you're going to pay, all the expenses for it, and then as well as the taxes for it, right? So there's that. So real estate is not liquid. Sure, you can have a high net worth with your properties and stuff. Oh, I've got, my net worth is over $1 million now because, hey, I got these properties, right? Cool. Awesome. Are you cash flowing? One, and then if you're not, and if you need the money, if you're in a bind, what are you going to have to go through in order to liquidate that real estate, right? And then what are you actually going to end up with, right? It's also going to depend on the time and the economy, right? Because obviously if you try to liquidate that and you try to sell and you're in a rush to sell, you might be at a loss again. So safety, right? Is real estate safe for your money? Okay. That would be a yes and a no, right? So that's going to depend on the location, right? What kind of property you have even. And then, of course, the state of the economy also. Okay, so is it safe? Yes or no? Or is the property now worth more than you owe, or is it worth less than you owe? What are you going to have to do with that property now, right? Are you going to have to sell it? Are you going to keep it? That's all going to depend, right? That's a yes and a no. And then the rate of return on real estate, yeah, that's also a yes and a no. And that goes back to the same sort of thing. Right? Is the equity now worth more? Is it worth less? Okay. Are you cash flowing? That's another thing too. Are you cash flowing on your real estate properties? Right? Do you have tenants that are actually paying? They're paying the rent, right? So, and that's another thing too. That's definitely gonna affect that, because hey, if you don't have tenants, you're absolutely not cash flowing. That's just a straight up liability for you, right? Sure, it might be going up in value, maybe, right? But then again, if you're just holding on to it, then it's really not going to be, how long are you going to hold on to it until it's worth more than what you've got right now? Okay. And again, could be worth less, right? So if you're not cash flowing on a property and it's not an asset, it is still a liability for you. So it's really like, hey, are you getting a good rate of return or not? Right. And then, taxes, right? So, there's pretty good, tax advantages to having real estate. Okay, when you're paying off a mortgage, paying off a loan, you can get some tax deductions on that. And then, of course, if it counts as a sort of like, your business, right? So there's some pretty good tax advantage on there, other than, some of the taxes that you'll have to pay when you liquidate and sell the property. And then, of course, on your gains on that property, right? But I'd say taxes, it does pass that test for real estate. Now, the fourth home of money, all right? The fourth home that a lot of people just don't know about, they don't get educated about, right? It doesn't get brought up a lot, which is sad and pretty ridiculous, right? because there aren't enough people out there putting it out, because it's getting flooded, the market, then the information, YouTube, Google, whatever, is being flooded by all this stuff about the stock market and real estate, right? And then banks, and loans and all that stuff. But the fourth home is actually the best home for money. This is the number one home for money that the wealthiest people use in order to pass on generational wealth, continue to use that money, right? For them, their family, for their business, okay? Business startups, for leisure, for vacations, whatever it is, okay? So it passes the liquidity test. Yes, it's very liquid, all right? It's safe. It is probably one of the safest homes for money. It has the safety of the bank, all right? And you get a high, nice rate of return, okay? That you can have, that's just about equal to the stock market, right? And then also tax-free. Okay, so it passes all four of those categories, right, for the laser test. So liquid, safe, get a good rate of return, and it's tax-free. Okay, what is this fourth home? It's insurance, right? Insurance is a multi-trillion-dollar industry, and it's the backbone of America and the backbone of really the world's economies, right? The insurance industry is the banks, right? So, and a lot of people don't realize that. They just don't know, right? Because again, the everything, information, right? All the information is being flooded out by all the other stuff I mentioned, right? But that is really the best place to put your money, right? For one, okay? Here's the thing. Insurance, right? You're transferring your risk to an insurance company, which is required to have reserves, okay, in order to pay out to the policy holders, okay? So I don't want to get too much into detail, right? Again, maybe another topic for another video, but there's definitely different kinds of insurance. And then of course, the insurance of today provides several great benefits in addition to just being able to have your money there in an insurance policy, okay? So you're being covered, right? You're actually getting a lot for your dollar, right? How do you turn $1 into 100? Insurance, right? How do you turn it into 200, 300, 400, 1,000? Insurance. Okay, you're getting a big bang for your buck when you have your money in insurance, because you have two buckets, right? You have if you have a cash value life insurance policy, you have your cash value, right? Which gains dividends, right? And you're getting compound interest on that year after year after year, right? And then you have your other bucket of money, which is really the huge bucket of money, because that's your actual insurance. That's your benefits, right? That's your death benefit, and more importantly, your living benefits, okay? A lot of people think that life insurance is just for when you die, when you pass away, right? And that's all it's good for. Absolutely not. Okay, maybe back in the past, yes, but the insurance company has always been booming. It's gone through several recessions, and they've been able to make and create different products that actually provide more benefits and are absolutely 100% used for when you're alive, right? It is called life insurance. It is for life. It is for you to use when you're alive. Okay, so when you get the right insurance agent, and you'll typically get the right insurance policy that is going to be created and tailored to you, for you and your goals, your family's goals, your financial goals, and whatever else it may be, right? So you can use it for when you're actually living, whether it be, retirement, or you can just maximize, if you want to just pass on that generational wealth no matter what, when you pass away. And you can, again, create your own bank. There's something called the infinite banking concept, which I'll get to in another video as well. But there's that, right? So insurance, you have the death benefit and the living benefits. That's that huge bucket of money, okay? And then your cash value bucket of money that you can use for whatever you want. And then there's ways that you can use it tax-free, especially when you've got such a huge cash value in there, right? It's another bank account for you because it's safe, nice and safe. You're getting a nice rate of return on it, right? And then you're also going to be able to access that money completely tax-free. And then when you pass away, right, that cash value that you have blossoms into that huge bucket of death and life living benefits that you have, and you pass that on to your family tax-free as well, right? So, and taxes is a huge expense that people just don't know how to really mitigate and stop losing money on taxes. Okay, so there is that, right? So probably a little bit late, but disclaimer, right? I'm not a financial advisor. Okay, this video is for educational purposes only, right? So that's all it is for, right? You can go ahead and take action on this advice, but definitely not. That's up to you, and that's for you to take that risk. Okay, make sure you guys do your own research. Make sure you guys ask the questions when it comes to your financial advisor, to your insurance agent, to whoever you're having manage your money, especially also, and ask questions of a CPA, right? So there's that. So those are the 4 homes of money. Okay, 4 homes of money, right? And if you're not investing, if you're not putting money to work for you, okay, it's going to be really hard for you to actually become wealthy and actually gain wealth, right? Because there's 3 ways for you to become wealthy. Okay, that's making more money, okay, saving more money, keeping it, and then investing it, right? You want to be able to do that, all 3 of those, and definitely being the investor, right? If you see Shark Tank, okay, that's the 4th box, right, of the cash flow quadrant. Investor, that is the ultimate destination for everybody, and where you should really want to be, and what you want to become an investor, right? So when you're able to invest your money never sleeps, and it's definitely going to be working for you 24/7, 365 days a year, right? Or 366, okay? And that's what you want to do, right? So I hope you guys were able to take something away from this video and able to learn a lot, and that I brought value to you guys when it came to learning about how you can invest, where you can invest into, and where you can put your money, right? And learned a little bit of something about the 4 different places that you can actually put that money, right? So that you can actually so you can take more action in creating your wealth for you and your family. Okay, so later on, I want to be able to make more specific videos on these different topics, right? Topics, what? On these different topics. But so I'm going to be trying to get that out, right? And of course, make sure you guys send me a DM, put down a comment below this video, and on any topics you guys wanna learn about, what you guys want me to talk about, right? And I'll do my best to get that out there and answer any questions that you guys have. Okay, so again, hope you guys enjoyed it. Make sure you guys hit the subscribe button. I'd really appreciate that as well. And of course, make sure you share the video with your friends, family, loved ones, cat, dog, pet rock, maybe even your neighbor. Hey, go check out Tobin Short on YouTube, heroesfinancialgroup.com, Heroes Financial Group on Facebook, and hope you guys have a good day.